Hello everyone. So today's topic will be about types of investments. So like my previous video, I've said that how to budget and how to have a structure for your budgeting, and there's a big part of it that I feel is very important will be investments. So what are the types of investments available and accessible in Malaysia? So first you have to identify the type of risks associated with the investment vehicles. So there will be low risk, medium risk and high risk. So let's start with low risk. Low risk investment vehicles are such as bonds, Amanah Saham, EPF, FDs. So we'll go back to EPF first. So we all understand that EPF is whereby a portion of our income goes to the EPF account where we can withdraw it at a certain age. I think it's important that people also understand that you can actively store money into EPF, meaning you can deposit money into it every month, a certain amount, every year, as long as you desire. So there's this extra option that let's say you have excess money and you don't know where to put it, you can put it in the EPF. But so the pros will be that it will be a very safe place because it's government regulated, but the cons will be that the interest rate is not exactly the return is not exactly high, and sometimes it will be quite a hassle to try and retrieve out the money for your own spending or whatever that you feel like you want to spend on. So next up will be fixed deposits, which is called FD. So this is another simple form of investment vehicle that I'm sure everyone knows about. So it's where you put your money into this fixed deposit account in various banks, and based on the interest rate that the bank quote you, you'll be able to get that percentage of return based on how much you put in. So fixed deposit usually have monthly maturity, yearly maturity, different types of maturity depending on what you choose, and the rate of return will also vary. So the pro of fixed deposit is also like EPF, it's very safe because it's regulated by the bank. So unless in the unforeseen circumstances that the bank ever goes bankrupt, your money will be well protected and the return is rather consistent. But the cons will be if you removed your fund before the maturity date, the bank will not pay you the interest rate, and also for fixed deposit, the rate of return is also rather low. But it's important for people to understand that, of course, when it's low risk, it's a relatively lower return. It's not necessarily high risk, high return, but it's more common that that will be the case. So next will be this thing called Amanah Saham. So what is Amanah Saham is that it's essentially a government-supported unit trust management. So what it does is you put in your money into Amanah Saham, and the management, the government managed firm will help you to invest and diversify your funds into different portfolio and vehicles depending on which Amanah Saham you choose, because there is a multitude of options in Amanah Saham, be it Bumiputra or non-Bumiputra, and then what type of unit trust plan you're looking for within Amanah Saham. So if anyone is interested, I'll go further into Amanah Saham, these topics in another video. So the last low-risk investment vehicle that I want to talk about is bonds. So bonds is essentially money whereby you loan your capital to someone and that person will pay you back a certain interest rate. So bonds, there are government bonds, corporate bonds, treasury bonds. So corporate bonds is whereby you loan your money to a corporate, to a big corporation, and they will pay you back that stipulated interest rate according to the time of maturity. And for government and treasury bonds, it will be you are borrowing money to the government, and essentially the government will pay you back the certain rate of return also based on the time of maturity. So bonds is another safe way to store your money because sometimes it may give higher returns than fixed deposits or EPFs, but also at a relatively safe investment whereby usually government and treasury bonds do not default on you because it's the government, so they'll eventually pay you back the money. But the downside is that there are some research needed to do because you need to figure out what type of treasury bonds, what type of government bonds, because there's also US government bonds, Malaysia government bonds, or any other country government bonds. And for corporate bonds also you have to do research into, so what is this corporate, can they be able to pay you back your money, or are they a company that might go bankrupt and default on your payment? So next we move to medium risk, and medium risk, the first investment vehicle that should come to everyone's mind is unit trust or mutual fund. So unit trust and mutual fund will be whereby you pay your money and your capital to a unit trust or fund manager, whereby they will help you manage your money by investing into a diversified portfolio based on your risk appetite. And then the pros is that your portfolio will be diversified and is actively managed by someone, by a firm or fund manager. But the cons will be that usually it will be hard for you to have a say on what type of investments you want. So it's not exactly your choice of investments, but rather it's up to the trust manager to depend and decide where your money goes to. And also usually there will be service fee and management fees that sometimes can be rather high in Malaysia. So personally, I do not like to invest in unit trusts and mutual funds because I feel that as someone young, you should be actively learning about the market and getting your hands on and getting your hands dirty into the investment market and actually find out what you like and actively take control of your money. But it's not to say that unit trusts and mutual funds are not a good investment, because they have been around for decades, and it will always be a good investment if you do not know where to start and you do not want to lose your money and you prefer someone professional to handle it. Then unit trust and mutual fund is the way to go. So next we have REITs. So REITs essentially stands for Real Estate Investment Trust Funds. So how it's different from property investment is that you do not need a huge startup capital to buy your own property, because what you do is you invest into different properties. And for example, in Malaysia, let's say you invest in this REIT called IGB. So IGB is essentially the Mid-Valley Real Estate Investment Trust Fund. So by investing into this IGB REIT, you're essentially owning a certain percentage of the Mid-Valley properties. So whenever there's a return based on the rent, based on whatever income that they have, which is usually rent, based on the properties, they will then be able to return the dividends back to you. So what is good about REITs is that it's very flexible, whereby you can choose your own investments where you think which property has a higher rental rate and which one is more suited for your risk appetite. And also that in Malaysia, dividends from REITs are not taxable. So whatever dividends that you receive from your REITs will be purely your income, and the government will not tax you on it. So next we have something considered newer in the market, will be something called Robo Advisory. So Robo Advisory is similar to unit trusts and mutual funds, whereby you invest your money into these platforms, and these platforms will have an algorithm to help you invest into whatever funds depending on your risk appetite. So a few Robo Advisories that's accessible in Malaysia, such as Stashaway, MyFio, and many more. So the pros of that is that similar to unit trust, you have someone more professional managing your funds, but at a lower service fee. So that's a good thing. But the cons is similarly, when you pass your money to someone else to handle it, you cannot exactly have control and take charge of your portfolio. And sometimes because of the optimization within the platform, it might change to investments that you do not like, but you cannot really control that and say, hey, I do not like this, can I invest into something else? But at the end of the day, it's still a very good place for young people to start if they do not know where to go, because you do not need any minimum investments to start usually. You can start with as little as 100 ringgit, 150 ringgit, and from there you start to learn more about the market and eventually grow to take charge of your own financial future. So the next investment vehicle will be index funds, or any equivalent ETFs based on the index fund. So what are index funds? Is funds that track the majority of the companies in the market. For the US, such as the S&P 500, such as the Dow Jones, and for Malaysia, the KLCI index. So what happens when you invest in such index is that your portfolio becomes very diversified, because you are essentially investing into dozens and dozens, a few hundreds of companies, and some stocks will win, some stocks will lose, they will gain, have capital gains, some will, their prices will drop. But when you diversify your portfolio over such a huge number of companies, at the end of the day, based on historical returns, you will always have a consistent and stable return at a relatively lower cost, because when you invest in ETFs and index funds, the expense ratio, which is how much expenses a year to pay for these ETFs and index funds, are relatively low as well. So next we move on to high-risk investment vehicles, where usually they generate the most returns. The first will be most commonly known as everyone will be properties. So properties, the good thing will be that if you are someone that likes to have a physical asset that you get to look at and get to visit and drop by, you like the safety of having a physical asset for you to manage, then properties will be for you. But properties has a higher barrier to entry, because the capital is large needed to buy within a commercial shop lot or a landed property or a condominium. So, and also there's a lot of more work with it, such as you have to go and look for tenants, renovation, repairs, maintenance. All this usually you have to do it on your own at the start. So there is also this downside to it. Next will be, of course, stocks. So stocks, there are two types of stock, which is dividend stocks and growth stocks. So dividend stocks are stocks that usually have a higher dividend yield, and they will give you a dividend and a passive income every month or every year, depending on the stock that you buy. And whereas growth stocks are stocks that you think that can potentially grow a lot within the next 3 to 5 years, and you want to profit off this change in price. So there is a lot more to talk about stocks, but I will specifically dive into more details about stocks in future videos. So next, similarly to stocks, will be Forex, which is currency trading. So you trade based on the bid and ask price of different currencies across the world, and you, as an active trader, it can be quite a profitable way to invest. But the thing about Forex and stock trading is that it takes a lot of time, effort and experience, a lot of homework to be done before you're able to become profitable and get good at it. So similarly, I will dive deeper into such more complicated vehicles in other videos. Then next, there will be this thing called cryptocurrency, which is something that has been around for recent years. And there are a few major types of cryptocurrencies like Bitcoin, Ethereum, and I would say that cryptocurrency will not be an investment vehicle for you unless you have done sufficient homework based on it and you have really good knowledge on what this cryptocurrency is about, because in the event it goes south, all your investments and money could go down the drain. Next would be P2P lending or equity investment. So P2P lending is whereby you go to platforms and you essentially loan money to corporations as an individual. So a few platforms such as funding societies, so you can go aboard and invest in as little as 100 to 200 ringgit and start borrowing your money to corporations at a relatively high return, up to 12 to 15%. But the downside is that there's not much guarantee that the governments will definitely pay you back, because you never know if the corporations will default on you. Then there are equity investments such as Crowd Plus, where you invest into startups and ideas that you think are good, and you can invest into these companies and get a percentage of their equity or shares. So the last thing will be not exactly investment, but more of like hedging. You hedge into commodities like gold and silver, whereby usually it serves as a protection barrier against the fluctuations of prices and inflation and currencies across the world, because commodities like gold and silver are relatively safe and they will consistently grow over time. So with that being said, we have come to the end of the video, and please don't forget to like and subscribe to our channel and leave a comment down below for any future content or topics that you wish for me to talk about. Thank you and see you all in the next video. Bye bye.